one applies to 401ks. Someone asked, they they worked in the US, obviously, they have a 401k, and they're dual citizens, and they plan to return to Ireland. And the 401k has, let's say, a mid six-figure balance. What are the implications to that? From a US perspective, depending on whether it's regular IRA, whether it's a Roth. The point is, it may be taxable in the US. The US takes the first bite of it. Let's say it's a regular 401k. So the US would tax it upon distribution. I'm assuming that you're not going with a premature distribution in which there's a penalty that will apply or whatever. But once you get to the stage where you've retired and you are required to take an RMD, a required minimum distribution, it'll be taxable by the US. Damien, Ireland?
Yeah, so if it's a case that you are, I suppose we'll take it in both scenarios, and I think that this question came through from an Irish domiciled person. So unfortunately, when it's brought back into Ireland, if it's taxed in the US, I'm fairly sure it's going to be taxed in Ireland as well, because they're going to, from the point that they become resident again in Ireland, they're Irish domiciled, so they're caught for their worldwide income. But of course, they would be entitled to double tax relief in respect of any US taxes that would be withheld on that. In the case of a non-domiciled person, so this could be a person who moves to Ireland in their retirement, they wouldn't be liable to Irish tax on it, assuming they don't remit it and bring it into Ireland.
Okay. All right. So I guess one of the key takeaways there is, okay, yes, it would be subject to tax, but there would be relief for the whole double taxation, which would be unique to the person's situation and circumstances, but there's relief. Okay.
Please subscribe, like, share, and comment below. Our books and upcoming event are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.